Welcome to a Procure Tribe presentation. My name is Tony Davey and I'm delighted to be your host as we go through the first chapter of our strategic sourcing series, a spend analysis, where we will analyze historical spend. A good starting point when planning for the future is to take a look at the past, as it offers an abundance of insight and knowledge. This is fundamentally what we do when we carry out a spend analysis. We want to analyze what the business contestable expenditure has been over a period of time so that we can better predict what the likely requirement will be for the future. We are not going to be doing any forecasting in this chapter, but we'll only focus on the analysis itself. We will cover off on the purpose of carrying out a spend analysis, including its many benefits and advantages to setting up a successful sourcing event, and we will then step through an example to showcase a typical process. Let's talk about spend and what we mean in the context of a spend analysis. When buying on behalf of a business, a record of that purchase is logged in the finance system. Various bits of information about the transactions are recorded and stored in a database, and details of these transactions can be accessed and reported on a later date. As sourcing professionals, we are interested in all those recorded transactions because we want to analyze specific information, interpret and understand whether or not value can be unlocked on any potential future purchases through strategic sourcing. Why carry out a spend analysis? Well, we're trying to better understand what the business purchased over a period of time, most likely 12 months or greater. 12 months because that normally aligns with the annual business cycle. We also want to know who in your company is doing the purchasing, as they are critical stakeholders who will benefit from a successful sourcing outcome. They will form part of the overall team and have responsibility of contributing and supporting the sourcing initiative. A well-done spend analysis will provide so many insights, including volumes, costs, the suppliers, and the business consumption locations. The spend analysis is fundamental to the overall sourcing strategy, and this will become more apparent as we step through the process later on in this presentation. In this section, I'd like to discuss the actual data required to perform the spend analysis. I'll first detail the essential data and then talk through the nice-to-have data. I'll also invest some time discussing where you should be able to get the data you require. So let's build a list and start with the essential data. The first requirement is a description of what is purchased. This field describes the item purchased, and this can have more or less detail. Example, a painter, or painter, admin room and kitchen, 2 weeks. You can see from the second more detailed description that additional information is very useful for understanding more about what is actually purchased. The price is the cost on the invoice for that specific line item, which in this instance is $500 for the painter. The next two fields detail the name of the vendor and the date at which the payment was made. Quantity and unit of measure are critical for calculating the cost per unit and are required when preparing the scheduler rates for the tender. In this example, the invoice was for $500 for 10 units of hours, which means the painter was charged at $50 per hour. 10 times 50 equals $500. From a sourcing perspective, you want to be sure that the pricing, whether comparing incumbent suppliers or in tender evaluation, is at the same unit of measure, so that you're able to compare like for like. A classic mistake is thinking you have achieved huge savings on a particular item, but you're in actual fact comparing hourly rates to daily rates. The final must-have field is that of the requisitioner. This is the person who ordered the goods or services and is going to be an important stakeholder to engage in order to better understand and confirm the criticality of this service to the overall impact on the business performance. Other data fields that are helpful include the cost center, which can provide insights around the geographical and operational location, a contract number, which is an indicator as to whether or not the service or good is covered by an existing supply contract. And by the way, supply contracts can provide valuable information such as scopes, schedules, and current prices. If categorization exists, this will be helpful in grouping the spend. Payment terms are useful as an alternative point of value, either for your business or for your supplier. Currency is important if your business is using and paying for goods and services in different currencies. And finally, many goods have a manufacturer's ID. This is super useful if you want to really understand what is being purchased and you want alternatives to be at least equal in quality standard. We have now created a spend list, and this can sometimes be a huge list of thousands of lines, if not tens of thousands of lines if the company is a large business. In many mature organizations, the spend data will be readily available in reports that already exist, and so the challenge is not so much obtaining the spend, but drawing out the insights. For other less mature organizations, you will have to dig for the spend data, and this may require pulling the data from the finance database. Most companies will keep records of both invoice data and purchase order data, the preference being invoice data for a spend analysis, because you can be more certain that the transaction actually occurred, because it was paid for. Whereas purchase orders are only an intent to purchase, but may get cancelled or be incomplete. As mentioned before, supply contracts are also another really good source of data, but are unlikely to provide quantities and will only provide information related to those items that are contracted. In some instances, you can get substantial information from suppliers who would be tracking their sales. Agencies too are a good source of information in circumstances where they secure services on your behalf, example a travel agency. Obtaining complete and accurate spend data can be really challenging. In some cases, you may need to reach out to multiple sources. Be persistent, don't give up, and eventually you'll get an accurate reflection of your company's spend. So now that you have the spend list, what do you do? Now that we have a spend list and before we begin the analysis, we need to make sure that the spend data is clean. To clean, we need to sift through and arrange our data looking for potential errors. For instance, sometimes there are duplicates in the information, and so we need to search these out and remove them so that the spend is not overstated. There are likely to be similarities which need to be corrected too. Looking at the example, you can see that all three supplier names are similar, and so there's a good chance that they are actually the same supplier, but have been erroneously captured in the system. Another important consideration is removing the non-contestable spend. The spend is uninfluenceable in that it's not possible to negotiate a better price. Example, tax payments, intercompany transfers, and charity payments. Can you imagine trying to negotiate a better tax rate with the government? Unlikely, so rather remove it so it's not captured in the analysis. And finally, keep validating your data at the various steps of the analysis to ensure accuracy. This can be done by verifying with others in the organization, like the finance team, budget holders, and cross-checking against other sources of data, example, company year-end financials. If possible, it's a good idea to check in with those who can validate at multiple points within the analysis to make sure that the data remains reliable. Having clean data is critically important to ensuring the analysis is accurate and credible. Now that we have clean data, we enter into the spend analysis with a purpose. Our purpose is to draw insights that will influence the overall sourcing strategy. Those who carry out a successful spend analysis are able to draw insights that are often not apparent at face value, and in some cases will be a surprise to leadership. These insights either quantify the spend data or highlight differences or changes in spending patterns. Examples of quantifying the spend include the size of the spend or the proportion as a percentage of total spend. Total vendors. Are there many vendors who are able to supply? Is the market competitive? Who are the buyers in the company? Who are the stakeholders we will need to engage with? And which suppliers are contracted? Are there existing relationships? What risks, terms and conditions do the contracts cover? Insights can also be made around the spend and how it is changing, increases or decreases of certain products and services, or changes in internal market share between competing vendors. Or even different pricing for the very same or similar products. If we plot the spend over time, are we seeing changes in demand? Is the spend growing? Which business operations and locations? All these observations help to establish the potential opportunities. Example, the same service bought from many suppliers could be aggregated and offered to fewer suppliers at discounted rates. Or pricing is trending up faster than CPI, therefore supplier margin may have been expanding over the historical rate increases. The trick with gaining insights is to make the effort to splice the data in various ways and to speak to those who are buying to seek their input. The best insights are generated by those who are curious. Now, let's run a dummy spend analysis to demonstrate the techniques and showcase how to identify insights to be used in formulating our sourcing strategy. Let's assume we have managed to obtain some detailed invoice data from the finance team of a quarry company. The data includes all invoices for the period 2019. We've cleaned it and plotted it on a graph to show the biggest to smallest vendors by annual expenditure. This gives us a total spend of 140 million per year. This is a typical spend profile. 80% of the spend is with just 20% of the vendors, and the lowest 20% is comprised of the remaining 80% of vendors. The lowest 20% of spend is called the tail spend. This spend is spread over so many vendors that the effort required to drive value from any one vendor would probably be unjustified. Example, securing a 5% reduction in pricing with a vendor who does $5,000 per year would be $250. Very different to securing a 5% reduction on a $20 million per year supplier, which would equate to $1 million. A strategic sourcing exercise is not the best approach to unlocking value from tail spend. There is another category of spend called the tactical spend. This type of spend is not quite large enough for justifying strategic sourcing approach. However, it's probably worth introducing some price tension with the minimum amount of effort. Perhaps just securing quotes from 3 alternative vendors, evaluated purely on price. The last section of spend is the 20% of vendors that make up the 80% of spend, known as the strategic spend. This category is ideally suited to the strategic sourcing approach, as there is large sums of expenditure on just a few vendors, and any value unlocked would likely be significant and far exceed the effort invested. I do want to note, however, that classifying spend based on its size is a practical starting point, but spend size alone does not fully describe the importance of the spend to the business. Risks should also be taken into account, and so should the linkage to the overall success of the business. I recall managing a $15 million contract, which was a critical maintenance agreement for the production line that produced $1 billion of revenue every year. A failure in that contract would cost the business tens, perhaps even hundreds of millions in revenue. So the contract was clearly a strategic contract, even though the spend was so small in comparison to the total business expenditure. Now that we have spend by vendor, let's assign the suppliers to categories of spend. These vendors provide contract labor. These vendors organize travel. These vendors provide uniforms such as shirts, pants, gloves, helmets, etc. We also have some office supply vendors for stationery like printing paper, pens, and pencils. We have one vendor who provides stone. Finally, we have a few vendors who supply catering. Can you see through the categorization phase that we classified all vendors until we completed at least the 20% of vendors who make up the 80% of spend? This means we are carrying out our analysis on at least 80% of spend. Those smaller vendors are still important because they could provide additional attention in a competitive tender process. This is a useful view of the spend, but let's now create a category view. For the category view, I've aggregated all assigned vendor spend into one bucket so that we can look at similar services or goods from a holistic perspective. I've also overlaid a vendor count for each category. This perspective certainly shows a different picture. Some early insights include 6 categories make up 80% of the spend. We only have one supplier for stone, many suppliers providing catering, and a tail of 39 vendors. This is a view for the whole business. Let's splice the data and take a look at the category spend by operating unit. For our quarry business, we have 3 operating units. So this business has a head office and 2 quarry locations. We've now assigned the spend to the 3 locations, and consequently we can draw some further insights. The head office is the biggest overall spender, with Quarry 1 second biggest and Quarry 2 being the smallest. Quarry 1 is the only site that purchases stone, which tells us there must be something different about this site. Quarry 1 and Quarry 2 have a large tail spend, which may just be a sign of many small local businesses supporting the quarry operation. We do need to be considered in this regard and not negatively impact the local communities. This, however, does not mean that local suppliers are exempt from providing fair value. We should drill down a little further into the data, so let's take a look at the contract labor category. We break out the contract labor by site and by the 6 vendors who provide the services. We note that vendor 1 is the biggest vendor in this category, and they are supplying all of the head office contract labor plus some labor at Quarry 1 and Quarry 2. We also have a vendor 2, who supplies to both quarries. We have 2 unique vendors for each quarry. Now, Let's see who's buying the contract labor at each site. Who are our requisitioners? This is a very helpful view because it informs us as to who should be a part of the sourcing event, who should contribute to the overarching sourcing strategy, who should be a part of the tender evaluation team, and who should be the operational representatives that help us to deliver the strategy across all operations. From this view, we can see who the biggest buyers are, overall and by site. We can also see we have a few unique buyers, and so we should get their inputs and understand if their requirements are different to other buyers. Paige is the biggest user at Quarry 2, Fred is the biggest user at Quarry 1, Joe is the biggest user at HQ. Raj, Tracy and Layla are unique buyers in that they use different vendors. Can you see the makeup of the ideal operational team to support our sourcing initiative? Can't go wrong with including the biggest users from each site and those who are unique. Now let's drill down even further and analyze what specific labor was hired and at what rate. Here we can see some very interesting differences. There are some opportunities for rate standardization where we would try to drive consistency across the business. Gardeners from the same supplier at 3 different rates, ranging from $35 to $45 an hour. Same with truck drivers, with different rates from the same supplier for both quarries. There are also some opportunities to consolidate, spend with fewer vendors and negotiate a better rate. We could aggregate suppliers across the 2 quarries for fitters, and then also across the 3 vendors for project managers. There could be good reasons for these differences. However, you can't ignore these early insights, and they certainly warrant further investigation. Early indications are that there is plenty of opportunity in the contract labor category in terms of inconsistent pricing, and so there certainly seems to be an opportunity to aggregate spend across fewer vendors for a better rate. Our spend analysis on contract labor is looking very supportive of a strategic sourcing approach. The same analysis should be carried out with the other 5 remaining categories and a decision made around whether or not there is more opportunity to deploy the strategic sourcing approach. That completes our simple spend analysis, and so let's wrap up and summarize what we have learned from our example scenario. There are 6 major categories that make up 80% of the spend. Contract labor is the biggest spend, and so we drill deeper into that. There are 6 vendors who provided contract labor across all 3 business locations, and we can conclude that it is a competitive supply market. We have identified 6 operational team members who we should engage to better understand the business requirements and to enlist their contribution to the overall sourcing event. And finally, early indications are that there are opportunities to unlock value for the business through rate standardization and supplier aggregation. In conclusion, when planning for a strategic sourcing event, it is important to understand the history of what was purchased and then to glean insights around what the potential opportunities could be before embarking on the exercise. We must make sure that our analysis is based on accurate spend, so should regularly validate our dataset to ensure that any insights we produce are reliable. A spend analysis is critical to drawing these insights by quantifying the spend and identifying differences or changes across time, locations, and stakeholders. There are many ways to visualize the information, and with a little creativity, we can splice and dice the spend in a meaningful way to establish insights. Knowing what you are sourcing, knowing who is buying, and who is supplying are critical to the next stages of the strategic sourcing process. In the next chapter, we will cover off on the supply market research, which starts with getting to know your incumbent vendors. Thanks again for your time. Hope you have enjoyed this Procure trial presentation, and I'm looking very much forward to hosting you again in future presentations.